Welcome to Morning Brief. I'm Julie Hyman, and let's get to the three things you need to know today. First up, Nvidia and AMD trying to wow the crowds at the CES tech conference in Las Vegas. Nvidia CEO Jensen Huang announcing its much anticipated Vera Rubin data center processors are in production. AMD rolled out a new data center chip as well. We're going to get reaction from investors. Plus, the rally in U.S. stocks stalling a little bit today after the Dow Jones surged above 49,000. It was a record high for the index. Chevron led gains on the blue chip index as it surged following the U.S. incursion in Venezuela. And business owners are growing increasingly optimistic despite inflation headwinds persisting. New findings from Bank of America detail a cautious optimism from small and medium-sized businesses looking at the year ahead. We'll speak to Bank of America's president of business banking to break down that report. Let's take a check of stock futures going into today's session. We've got kind of a mixed picture, as we said, kind of stalling after yesterday's push toward a record on the Dow. Today, the Dow's indicating a drop of about 0.1% at the open, but let's call it little changed across the board here. We'll see how it plays out in today's session. We've been seeing increasing rotation, which is not unusual, either at the end of a year or the beginning of a new year. Rotation out of some of the winners from last year into some of the underperforming names. So we'll see how that shakes out over the course of today's session. Of course, one of the outperforming sectors has consistently been tech, and Nvidia CEO Jensen Huang laying out the company's path forward at CES in Las Vegas, providing a closer look at its new computing platform for AI data centers, Vera Rubin. The company also pushing what it's calling physical AI, unveiling new robot models and plans to test its own robotaxi service.
Wherever the universe has information, wherever the universe has structure, we could teach a large language model, a form of language model, to go understand that information, to understand its representation, and to turn that into an AI. One of the biggest, most important one is physical AI, AIs that understand the laws of nature.
And let's talk more about Nvidia and the tech complex more broadly. Joining me now, Antoine Schiebon, New Street Research Technology Infrastructure Analyst, Ivana Dolevska, Spear Invest founder and CIO, and Sean Clark, Clark Capital CIO. Everybody, thanks for being here. Antoine, I want to start with you and what we heard from Nvidia. As I said, we'll broaden it out in a moment, but what to you was most significant? Because Jensen Huang is very good at painting these grand visions. What did investors most want to hear from him, and did he deliver?
Hi, Julie. Thanks for having me on the show. So I think, what's most interesting here is to see NVIDIA capable of rolling out 6 new chips, like a CPU, a GPU, networking switches, NICs. That illustrates, the kind of co-design that's required to keep improving system-level performance at that kind of pace, NVIDIA is really synchronizing every year multiple silicon and software building blocks, and the whole unit of computing ends up landing together, working as expected, generation after generation. And when this from land, NVIDIA is structurally the best placed vendor to sell you the networking systems that are validated to work with all of that on day one. And that kind of integration, time to market, and ecosystem strength really play together, and that's what is feeding NVIDIA's market power today.
Ivana, I want to turn to you on this. Is this all, though, just sort of incremental, or is it, what does NVIDIA need to do to keep this momentum going, and can it just sort of do more of what it's been doing? Is that enough?
Well, I think it's enough, right? Because as long as the numbers are keep going up, there's going to be upside in the stock. From the event specifically, this was more of a check the box moment and making sure that they are delivering on the next generation platform. It seemed like everything was on track. Just for background, the shift from this generation is much simpler than when we were shifting from Hopper to Blackwell. So I think that should give investors some confidence that this transition goes smoothly.
And so, when we're looking at the stock performance, Antoine, I'll take it back to you. We're not seeing a heck of a lot of upside here this morning following these comments.
I think, we've seen that for some time now. We Nvidia has been, trading on low 20s, 2027 earnings. And I think, now investors are just concerned about how growth will normalize, beyond 27. We have great visibility on 26. Hyperscalers have laid out their capex plans. It's consistent, with the 500 billion of bookings that Jensen has been talking about. But now the key question is how fast is capex going to grow beyond 27? That's question number one that investors are concerned about. Question number two is, of course, the market is going to be so large that Nvidia is going to have to make room for alternatives, for ASICs, for AMD. And so the other question is, how much room is Nvidia going to make, and how much is Nvidia's data center business going to grow, as a result of capex growing, how much Nvidia going to grow? So those are the concerns that I think are waiting on the stock today.
Ivana, if one of the things that Jensen said yesterday was that, they're trying to make chips more energy efficient, more cost effective, then why would capex need to be, wouldn't that imply a lower capex is necessary?
No, actually, it's kind of the opposite, right? Because basically, where we are sitting here today, cost per token are still extremely high. So basically, the cost to use AI is extremely high, which is preventing a lot of these AI agents from gaining broad adoption. So you're going to need a lot more compute at a much lower cost. So that's basically why capex numbers are going significantly higher, even though we're getting so much better performance.
Sean, I want to bring you into this because, obviously we've been talking about sort of the technical ins and outs of what is happening within this industry. As an investor who's more macro focused and kind of big picture, how does this now fit into your paradigm for 2026? And how much attention are you devoting to these sort of AI-specific stocks?
Yeah, wonderful question. First off, I really agree with that thesis. That thesis you just laid out was productivity, productivity, productivity. So from a macro standpoint, we really enjoy and are looking forward to the continued productivity enhancements that these AI generators are providing to not only just the technology companies, but companies are either technology producers or technology consumers. So those technology consumer companies now are starting to benefit from that productivity. We're starting to see it with earnings, right? More productivity means higher margins. Higher margins mean better earnings looking forward. That's wonderful for the overall economy. We expect that to continue to propel forward earnings growth into the future. 14.5% earnings growth for 2026 expected for the S&P 500, 12.5% in 2027. You put that together and apply a 22 forward multiple, which is where the market's trading right now. That gets us to about 7,700 for the S&P by the end of this year. I think it's a productivity-led bull market that's bound to continue.
Sean, one of the things I'm confused about when we get all excited about productivity is productivity, at least to some degree, is code for fewer people working. You need fewer. If the company is more productive, that means it doesn't need to hire as many people. So if fewer people maybe have jobs, who's spending in the economy? Where's that disposable income go?
It's still there. Sure, there may be lower jobs around the margin, and we're seeing that with the unemployment ticking higher and just job creation being subpar really since May of this year. But we're also still seeing unit labor costs come down to about 2%, which is going to be 2% equal to 2% inflation looking forward. So we're trending down towards the Fed's long-term inflation target. We think overall, consumers are still pretty robust in terms of spending and their ability to do that. As inflation continues to moderate, I think that's only going to be enhanced.
Antoine, I want to pivot back to you because I want to ask you about a couple of the other companies that presented at CES. We had AMD come out with some new products as well. We had Intel coming out talking about people buying an Intel computer. I mean, what else stands out to you from the conference among some of these other announcements?
Yeah, so you had, as you mentioned, AMD, Intel. You also had Mobileye actually give a talk yesterday. So on the chip, that you referred to on AMD, it's a chip that's really targeted at enterprise AI data centers. I think the key, moving part for AMD today is how quickly they're going to ramp, their supercluster with OpenAI. OpenAI and AMD have a partnership that's going to start ramping this year. And so the question is, when are we going to start seeing tens of billions of dollars of AMD GPUs? So that's not, like a major like moving part for AMD, at least near term. Of course, long term enterprises will also deploy AI infrastructure, but near term I would like to still focus AMD more on the cloud chips. Now, I would like to focus as well maybe on Mobileye. I think the announcement of like a second surround ADAS customer that they talked about last earnings. They gave more details about that. Is going to represent like 9 million like vehicles equipped with their chips over the lifetime of the program. That's very important because it shows that Mobileye is the only vendor today beyond like Tesla who's really shipping autonomous driving capabilities at that kind of scale. And Nvidia talked about autonomous driving as well yesterday. We can talk about that later if you want. But Mobileye, I think is positioning itself as like a supplier of like ADAS for a broader set of customers, like for OEMs in general.
Yeah, and we definitely saw that Mobileye shares, they came back yesterday and they're up again today. So Ivana, how much energy are you spending on the sort of next movers in these various subcategories of AI, whether it be autonomous driving or some of the other applications?
So Julie, we think applications are still a few years away. So we're spending a lot of research up front, but we don't have very many opportunities that we see today that have outsized potential. Autonomous driving is certainly one that's on our radar. I think Nvidia's announcement was pretty interesting as part of the product offerings that they announced. But it's still a little bit early to tell who is going to win that race. Robotics, similar thing. It's still too early to say if it's going to be a winner-takes-all market or is it going to be multiple players. We are focused more on the infrastructure layer and the software layer. I think that's where it's going to be. That's where there's going to be more returns to be made in the near term. I think if you look at 5 years out, some of these applications will start coming to fruition.
And Sean, coming back to what I was talking about at the top of the show, the rotation that we tend to see at the beginning of a year, also that broadening, right, that we've been talking about. Are there particular areas of the market where you think that AI is going to catch on in particular, or will be especially helpful for those productivity themes that you were talking about? Are there specific sectors?
Yeah, I would think and really pay attention to high human capital businesses. So let's say finance companies, retail companies, consulting, accounting type businesses. Those that are human capital intensive, I think stand to benefit the most.
Are those some of the areas that you're buying going into this year?
Yeah, we're overweighted in finance, healthcare, consulting businesses. What we've seen happen over the course of the past, let's just say, fourth quarter, the market has really broadened out from tech-specific growth driving the indexes higher to now we're seeing value. Like the Russell 1000 Value Index has been outperforming small caps. So quality value companies are now starting to experience the benefit of this AI revolution, driving earnings, driving productivity, driving margins higher. That's expanding. We think that's a good thing for the overall market as we look forward. The more the market broadens out, we think the more longevity this cyclical bull market has.
Sean, thanks so much for being here. Ivana as well. Antoine, thanks for playing too. Appreciate it, guys. And coming up on Morning Brief, we're going to bring you the economic outlook facing the business community in 2026. We'll be joined by Sharon Miller, President of Business Banking at Bank of America. That's next. New findings from Bank of America show small and medium-sized business owners are cautiously optimistic for 2026, but they're still grappling with some lingering headwinds like inflation, for example. Joining us now, Sharon Miller, Bank of America's President of Business Banking, on some of this work that you guys have done. Thank you so much for coming in and being here.
Thanks for having me.
I wonder how much small and medium-sized businesses' concerns or vibes overall mirror what we're seeing in individuals, just everyday Americans writ large. In other words, kind of that nervousness, but pushing ahead. I mean, how closely?
Well, in our latest survey, we found that 70% of business owners expect to expand this year and their revenues to increase. So when you think about the outlook for business, both small and mid-sized companies, they're cautiously optimistic. I would say, consumers, they fuel small business.
Sure.
And so their spending certainly helps because small and mid-sized businesses are part of the communities. And that's where consumers are spending. But you're right, we see consumers trading down to different categories. They may be not going out to the very expensive restaurants, maybe going to more affordable solutions. So we're seeing some trade downs, but we're still seeing strength in the consumer and certainly resiliency.
And that's 70% of folks of those business owners who expect that expansion. How does that compare to recent years? Are they more optimistic than they've been? What's that trajectory looked like?
It has been steady, but it is improving. And so when I think about 2026, this is really a year of discipline for business owners as they think about growing revenues, but also managing their expenses and their cash flow. So that's very, very important. And labor, we know that labor is certainly an issue, getting the right quality labor for their businesses, and we're in a tight labor market, and so that has been a concern. In fact, 60% of business owners are concerned about that, and that seems to be one of the highest areas of concern in the business owner from our last report.
That's really interesting because that felt like such a pandemic, an acute problem, during and then the legacy of the pandemic, that sort of worker quality shortage, that I'm actually kind of surprised that is still hanging around. What do you think is going on there?
Well, for 10 years we've been doing this survey, and for 10 years this has always been in the top 3 issues. So it is about finding the right worker. When you have a company less than 500 employees, every employee counts. And you're competing against the big corporations, and so many of them have benefits that perhaps small and mid-sized businesses don't provide. And so we're helping with issues like that for companies to get those benefits set up, to make sure they're helping with their workers' retirement planning. We do all of that, the workplace benefits. And so when you think about how we think about the business, it's not just about their business itself, it's about their wealth and how are they planning for the future. It's about their employees, how are they helping those employees, because that's important in attracting and retaining the right labor.
I mean, that also kind of speaks or begs the question maybe of, is there an issue with the quality of the overall workforce over the past 10? In other words,
right skilled labor.
Right, exactly,
Yes.
exactly. So that's interesting also, and I imagine you also do a lot of work in terms of helping them train those employees and those kinds of programs.
Yes, we do. And in fact, I mean, it's about making sure that people have the right skill set in order to go to work for a company, whether it be a manufacturing company, getting up to speed on digital tools. As you think about companies and adopting AI and technology, 80% of our clients are using digital tools, and those businesses that are adopting digital tools, whether it be payments, making it easier for people to interact with those businesses and pay, those businesses are growing 2 to 3 times faster than when you look at businesses that are not adopting those technologies.
So we talked about one challenge facing these businesses in terms of the labor. I'm curious how they're thinking about some of those big issues that are facing the economy. I mentioned inflation coming into this. Tariffs were sort of part of that, and I imagine also a burden for some of these small businesses. So how did those kinds of issues rate on the survey?
Well, the inflation is definitely a concern, although we see it for 2026 really moderating. When you think about supply chain, it's all about the understanding of what's going to happen, and especially with tariffs. And we do see more stability now. When you think about first, a year ago, 2 years ago, how this has evolved, and business owners like certainty. They want to be able to plan, and so I think that's most important. We're also talking to them about supply chains. Where are they getting their goods and services from? So all of those conversations are ones we're having with clients every single day.
And then I'm curious, expected rate cuts, how sort of leveraged they are to that, how helpful that could potentially be for them.
Very helpful, because that'll bring down the borrowing cost. And so as you think about, Bank of America, we are the #1 lender to small businesses, 18 consecutive quarters. So for the past 4 years, we're out there providing access to capital to business owners across the country. And when you think about rate cuts, that's immediate. It also, many of them borrow on lines of credit, and so that immediately goes in and makes their access to capital cheaper than it was before the rate cuts. So that's all positive signs for 2026 and what's happening with the business owner.
Yeah, and fueling that 70% who think that they're going to expand.
Yeah.
Sharon, thanks so much for being here.
Thank you for having me.
Appreciate it.
Thank you.
Coming up next on Yahoo Finance is Opening Bid. Our executive editor, Brian Sazzi, hosts that show, of course, and he is here right now wearing purple, very festive.
I don't know, it's not purple.
Lavender?
Actually, no, it is purple.
Is it a lavender?
Lavender. It's
Fuchsia.
Yahoo-ish
No,
purple,
it's not
Julie.
It's not bright enough to be fuchsia. That's
Yeah, fair enough. Well, I'm all in on Nvidia, Julie. I mean, I get the move in Bitcoin. That's kind of cool to see. That's cute. I see what AMD did on stage at CES. That's cool. Intel said something about chips that may or may not be making. Intel, whatever. I'm all in on Jensen, Huang. We're coming out blasting, Julie. We're going to talk about the stock. Got Dan Ives, Gil Laurie in the house. I am jacked up, Julie.
I know what else you're going to talk about.
My flow state that I mentioned this morning in
Well,
Slack.
I was going to say what Jensen was wearing as well.
Oh, I love that jacket. I'd wear it right now, Julie.
I know.
Go buy it for me.
I know you would. I can't afford it.
Yeah, you could.
All right. Stay tuned for much more Brian Sazzi and Opening Bid next.